Bitcoin just dumped $3,000. Oh no, the bear market's starting, right? Not so fast, because if you zoom out just a little, you will notice that Bitcoin is holding on to the same range we've been trading for days. Which leads us to our first chart of the day, analyzing the ascending triangle on the 4-hour time frame. Now, it's worth noting that this overall structure is still intact, and we also have the higher low formation since late November, which remains on the cards. The only thing breaking right now is people's confidence. Now, heading over to some macro news, we're going to look at what Michael Saylor recently tweeted, which is Bitcoin is the new hurdle rate on Wall Street, with explosive ad work going on. Absolutely insane. Saylor is basically telling institutions, if your returns don't beat Bitcoin, you're doing it wrong. The complete Wall Street math is being rewritten, which now leads us over to our next piece of macro news, where 126 crypto ETFs are waiting for approval, where we have 21 Bitcoin filings, followed by basket ETFs at 15, XRP waiting at 10, Solana at 9, and ETH at 7. This is not ETF backlogs, this is institutional FOMO on a spreadsheet, which leads us over to our last piece of bullish macro news. Pakistan's crypto regulator says the country is embracing Bitcoin as economic infrastructure and using its 20 gigawatt energy surplus for BTC mining, AI, and predicting emerging markets that will lead the next wave of adoption. It's rather evident that Bitcoin is becoming international infrastructure, where Pakistan predicts the next emerging markets will drive the next adoption wave. The West is focusing on ETFs, whilst emerging markets are plugging Bitcoin directly into their power grids. So now that your dopamine levels are peaking, let's look at the first Bitcoin chart that we need to analyze for short-term survival. Now, this is the Bitcoin Ishimoku cloud, and what we actually have here is a cloud base which currently sits at this wick low from mid-November at 80K. This is a critical level of support that we need to hold. Now, why is it so critical? Because any closes below this level have in the past predicted a bear market for Bitcoin. We're not talking a wick, we're not talking an intraday close, we're talking full-on candle closes below the Ishimoku cloud to validate such a scenario. Ultimately, if Bitcoin holds above this cloud base, this is normal volatility. Start to close below it, and the picture might just shift. This is the line between scary dip and cycle risk. Keep your eyes on it closely. Now, let's zoom out. This Bitcoin Ishimoku chart does significantly carry risk. However, on the macro time frame, there is ultimately a sign of strength. These red arrows from the past have indicated previous levels of resistance for Bitcoin, and as of November 2024, we actually saw a markup through this point and have now continued to hold it as support on 2 occasions. It's very clear that in the last couple of months, we have seen an evident retest back down to this trend line, which is currently holding as support. And as we said at the start of the video, despite this $3,000 drop, the support line is still intact and valid as long as we remain above the trend line, which has an ascending level, so it's very hard to give an absolute accurate price, but it sits roughly between 80 to 83K in the next coming weeks. As long as this line holds, the bull run is still intact and the foundational base is valid for a continuation to higher targets. Which leads us over to our next chart. Traders, this one is for you. On the 2-hour time frame, we have several liquidity sweeps that have offered great entry points. Now, simply based on guidance, the 2-hour chart is a liquidity paradise. We have, over the last couple of days, managed to secure two very successful trades. One of which is where we got a perfect retest entry back into the supply block where we saw rejection at 94K. We then managed to secure the trade back down into our TP area, which sits in these lows from early December. At this point, when we got a liquidity sweep, there was a perfect retest entry back in this demand zone, and we witnessed another rally back into the supply, securing such a trade. Now, at this point in time, we did see rejection from the supply block, and we are currently hovering over our take profit area, waiting for a decision. Now, this is ultimately how the market traps and hunts both sides of the table. It's not bullish, it's not bearish, it's just structural mechanics. And if you understand liquidity, you understand the long on price before Bitcoin actually wants to get there. Which now brings us over to our last chart of the day, which includes our next area of interest. And this is the zone everybody will be watching if Bitcoin does decide to break lower. Ultimately speaking, we have a level of support right this second that Bitcoin is sitting at on 90K. Failing to close above this key level will ultimately result in a pullback back down to the lows from sort of mid to late November. We evidently have this wick right here, which sits at 81K territory. But do not panic, buy the fear. If we do succeed in retracing back down to such a key level of structure and ultimately fill in this wick from mid to late November, you can see that it would be bringing us back down to a key demand block from the previous lows of April in 2025. In this territory, we have massive liquidity pockets, a major demand opportunity, and this is where we wait for the market to breathe to allow us to obtain another great setup. Now, to summarize, here is the overall whole story. Bitcoin's 4-hour ascending triangle is intact. Higher low support is building over time. We have a range of compression between 95K resistance and low to mid 80K support. The Bitcoin Ishimoku cloud is currently trying to form a base build, and we must not close below this base, which currently sits at 80K. Even larger macro timeframes. This is the Bitcoin bull run support, where we have now had two successful retests on this trend line. Hold this, and the foundational print for higher highs is more than likely on the cards. We also have the 2-hour hunt and tracking of liquidity sweeps. And lastly, the next area of interest where we should not panic and potentially buy the fear if we see a rejection back down towards the low 80K territory, filling in the wick from late November, which would also coincide with retesting these March and April lows for a massive relief bounce. Until next time, take care.